Barcelona, Ebony?
It's really cold. It's really windy. It was
Really?
beautiful blue skies today, but it was cold. Although my mum sent me a picture of my home in Wales covered in snow the day after I left. So
I bet that looked beautiful,
Eb.
We're in such a nice place in Wales. And I can see we've got another South Wales just dropped into the chat box. Sole Trader, South Wales, another Sole Trader from Somerset, up and down the country. Keep them coming in the chat box so we know who you are and what locum role that you take at the moment. And if there's any questions that you've got as well, this is your opportunity to ask our fantastic accountants here those questions. There's no such thing as a stupid one. We've said that plenty of times before. So let's get started. We're going to just have a quick chat about VetYou, who we are and what we do before we start handing over to getting the conversation flowing with our fantastic accountants, Richard and Courtney from Gorilla Accounting. So at this point, I am going to hand over to Matt Dobbs, who is one of the 4 VetYou directors that you can see on the screen here. Many familiar faces for you, 3 of which are on this call, me, Ebony and Matt, to tell you a little bit about VetYou, who we are, what we do, what we're about, and then let's dive into some accounting.
Great. Yeah. Good evening, everybody, and welcome. It's great to have you on board. It's about -6 here in Sussex, so I'd love to know if you're in a colder place than Sussex this evening. VetYou was founded purely to be able to allow vets and those in the veterinary profession to take more responsibility and to guide them around their personal and professional decisions around their finances and their income. And it was clear to me that as we saw a decline in the number of IFAs and the sorts of people that would normally give vets advice, that many vets were struggling to be able to find good advice around how to secure their health, their income and their future. And so VetYou was founded purely around an educational process to be able to put vets in contact with the right information, the right advice, and certainly the right people, because we can never be masters of all the knowledge that we need to help us to manage those situations. And that's purely why VetYou is here, to help you, to guide you and to steer you in the right direction to finding you the best and the right advice. It doesn't matter how long you've been dealing with your personal finances and dealing with money in general, you always could do with more advice. I'll be honest with you, I'm 50 this year. I've been running my own business for 20 years, as well as being an employee, and I still managed to mess up my tax return this year. So, you know, if I'd have taken a little bit more advice about knowing about payment on account for my tax return and exactly how my pension payments were being made, then I probably wouldn't have made such a mistake. So there's always something you can learn, and that's why we've got some great professionals here this evening to help guide us.
Oh, I couldn't agree more, Matt, as well. And we were actually all having this conversation just before everyone came in, that often we kind of forget about going to professionals because we put that pressure that we should know it all. We should know how to figure it out. We should be able to learn it. And actually, these are like ever-evolving fields. We were saying how dates change, new legislation even comes in. And actually, the guys like Courtney and Richard, they're on the ground all the time. They're doing this every single day. And like you said, Matt, it's probably like bread and butter, whereas missing out on something like that can cost us. So I love that you shared that. And that's absolutely why we've got some experts with us this evening. So everyone take full advantage of asking the questions. We've said before, no stupid questions. You can direct message them to Ebony, Matt, or I if you don't want the name to pop up in the chat box. But honestly, if you're thinking it, there's probably somebody else on the call that's wondering it as well. You won't be on your own. And call out any jargon that you hear. If you're hearing words or terms and you're like, I'm not sure what that abbreviation is, I'm not sure what that means, just ask, right? You're in a safe space where you can ask these questions. So we are super pleased that we have 2 of the fantastic accountants from Gorilla Accounting. We've said already that Gorilla deal with contractors, freelancers, lots of vets, lots of medical professionals even. They know these industries. They work with us day in, day out. So let's use that expertise this evening. I know they're very kindly gifted us some time in one of the busiest months for accounting, which we said already is January. And we've got a few topics that we're going to start touching on, and then we're going to be open to questions. Some of you pre-submitted them already. I know we've got a lot of sole traders on the call from what I can see. but we're going to just answer them with everybody in mind. There are so many of you that are going to be watching this recording back afterwards as well. So we're in a new year. We're in 2023. We're halfway through January already. I'd love to know, Richard and Courtney, like, what are some of the changes that we need to be aware of for 2023 as locum vets in whatever way that we're trading?
I'll start off on this one. There's quite a few tax changes that's happening in 2023. Most of them kick in from April, which sort of runs alongside with the tax year. So if anyone's wondering how your taxes are usually reported individually, it's from the 6th of April to the 5th of April each year. And a lot of the time, any changes with tax thresholds and updates also run along with that period as well. There's been quite a few changes for limited company, so we'll start off with that.
Yeah. And
the main one is the corporation tax changes. So there's going to be an increase in the rate of corporation tax.
Oh no.
Yeah, that's the bad news. The good news is it's not going to affect a lot of the small businesses, because if your taxable profits are 50,000 or lower, the rate's going to stay at 19%. Once they get to 250,000, it's going to 25%. And there's a tapered amount in between.
And that's just profits, Richard, is that right?
Profits.
You said? Okay.
Yeah, that was my next bit. So the important thing is that's the profit. So it's not your turnover.
Yeah.
It's your income less expenses. And expenses that can range from all sorts, but it does include things like your salary, pension contributions, anything you require to do your business. So there are ways of making sure that your profits fall under there. And for a lot of sort of one-man bands and people working for themselves, you're still going to fall in that same tax bracket of 19%.
And where can people find like the tapering if they are fortunate enough to end up being over £50,000 a year profit at any point? Like, is that on HMRC? Would they go to their accountant?
Yeah, so it's all published by HMRC, but your accountant would be able to work this out for you. Essentially, what happens is once you get past that point, a higher rate is applied. So eventually, when you get to £250,000 profits, everything will be taxed at 25%.
Okay.
So as strange as it sounds, the rate in between is actually 26.5%. It's a higher rate. To drag the whole, it doesn't work like any other tax. It's bizarre.
Wow.
So yeah, if you want to calculate it, you can. But basically, what you have your first 50,000 at 19%. Yeah. Everything between just over 50,000 and 250,000 is at 26.5%. So eventually, when you get to 250,000. The amount taxed at 26.5% and the amount at 19% combined would be 25% for the whole lot. So that's why it's done.
Oh, and that's just limited companies.
Just limited.
Yeah. So are there any other changes for limited companies? So we've said like if they're on up to £50,000 profit, there's not much change now. But if you are between 50 and 250, it jumps up quite a bit. So again, the value of having a skilled accountant on board that can maybe make sure that you're aware if you are going to head into that different territory. And also then if you go over, which I would be incredibly amazed if any of us on this call were fortunate enough to be over $250,000 profit, it changes yet again. So what else is there for limited companies while we're on that topic to be aware of?
Well, it's if you're a shareholder of a limited company, you receive some income as dividends. So more bad news here, because the actual tax, there's a tax-free dividend allowance on top of your personal allowance, which is currently £2,000. That's going down to £1,000. And then from the following tax year, it's £500. So, it's a bit of a hit for the limited company owners. So I notice a lot of the guys are sole traders. So that's, maybe an argument to stay as a sole trader, but there still are a lot more benefits in many ways for the limited company option. Yeah.
And in terms of that changing, obviously that's the tax-free allowance of dividends, because I know, and we won't dive too much into this, but I appreciate that a lot of people that are running via limited companies will take a minimum salary, then they'll take the rest of their money from the company as a dividend. So that amount that they can have tax-free is going to drop down from 2 grand to 1 grand to 500. Is that right?
Yeah, that's right.
Yeah.
That's right. Yeah.
And in terms of anything else for limited companies, Richard, or do we want to move on to sole traders?
That's the main thing. But there are, just to sort of point out, you know, there are still a lot of benefits with the limited company. You can have more than one shareholder, and like I said, the way you pay yourself in dividends, it doesn't necessarily, you know, you don't need. Whereas with the sole trader business, everything gets paid to you in the same tax year. Limited company, you do have a bit more control over when you pay yourself, and when the personal tax is triggered from when you receive that.
So it's not all bad news. Oh, sorry, Courtney. Go for it.
I was going to say, I think as a limited company as well, some of the benefits you find is through the expenses. So you can get a lot more expenses as a limited company, which have no personal tax implications, but have a personal benefit. So you can get more of them through the limited company that reduces your tax bill compared to a sole trader as well. So you have got, it's not just the dividends that's a bonus for the limited company as well.
Yeah. And have you got any examples of those, Courtney, for anyone that's listening?
Yeah. So some of you, I'm not sure if any of you are directors of a limited company, but you might be aware that a limited company can give all their employees trivial benefits each year. And for a director, you can have up to 6. So a trivial benefit is basically a gift of some form to your employees for no particular reason. So it can't be cash, or it can't be a cash voucher, but it can be something such as a gift voucher. So I don't know, Amazon, everybody uses Amazon, don't they? So you can have 6 times 50 Amazon vouchers per year. I mean, you don't have to have them at a particular stage in the year, you can stagger them out, but that's what you get per personal tax year, which it's great because you can be getting some Christmas presents for your limited company tax free. So
bonus. I love that. And you know, when I found that out, I did just that, Courtney. You know, you could have 6 up to £50. I was buying gift vouchers at birthdays, and just knowing the ins and outs of how that works. And I think, again, that's testament to having a professional on board to know like those intricacies and realize where you can get that from as well. So I realize like the difference between sole trader and limited company is a big topic, and we'll touch on it in a few questions time as well. I know we've got lots of sole traders on the call at the moment, and I appreciate, we know that with many changes of IR35 reforms, everything like that over the years, there've been a lot of people that have gone more down the sole trader route, dependent on the availability of work, who they're working with, and so on and so forth. So it's not all bad news for limited companies. We've said so far there are still benefits to doing it, even though there are going to be some changes to dividends, potentially corporation tax. Is there anything else limited wise changes for 2023, or should we see what changes we've got for sole traders in 2023?
Yeah, I think that's pretty much it. What do you call it?
No, I'd say we've summarised the main points there for a limited company.
Yeah.
So what about sole traders? For all the sole traders on the call, is there anything that they need to be aware of as locums as we head into 2023, of which we've already blistered halfway through January?
It's pretty much similar to the current year. So in many ways, that's good news, because changes aren't necessarily for the better. There was, I'm sure you all remember, there was an update to national insurance at the start of the year. It went up with the social care levy. Then that was removed in November. So yeah, it's back at the rates they were before, which applies to employees as well as sole traders, the NI rate that you pay. And the income tax rates have been in the main frozen, so the personal allowance is the same, so everyone will have 12,570 tax free for income tax. That applies for all individuals, no matter where your income comes from, if it's sole trade, salary or dividends. That's going to remain the same. And similarly, that high rate tax threshold is going to remain the same, which is just over 50,000, isn't it, Courtney? Yeah. So there's not much change. In the sole trader area as far as tax is concerned.
And that, because it was the health and social care levy that we had, that was 1.25%, was that right? that
Yeah.
people were paying, and that's gone now. So technically,
It
everyone
has
might get a
on-
bit more.
Yeah,
on.
it has on employment and on self-employed profits. However, it's not for dividends, so that's one to take note of. At least that's a nice positive for the sole traders out there.
Bonus, extra bonus. So we
Yeah.
can all be expecting to see, maybe it might be a little bit, but every little helps at the moment
Yeah.
if we're getting a bit more than we expected. And I guess the other thing I was going to ask you guys about as well, because I might just be in these circles, being a part of VetYou and being in contact with financial professionals all the time, but I have heard we have making tax digital on the horizon. Can you tell us a little bit more about what this is, who it's going to affect, what that's going to mean, when it's coming in? Like, let's demystify it a bit.
Well, actually, there's been a recent announcement on making tax digital. So actually, it was due to come in for sole traders and landlords in 2024.
Yep.
It's now been delayed to 2026. So
Ah,
yeah, HMRC.
breaking
Well,
news.
Yeah, they're pretty. Well, I don't think they've got everything sorted on their side. I know there's been a lot of changes with tax and everything, but yeah, it's been delayed. So for that reason, don't worry about it.
Nice.
If you are VAT registered, it's already in place for VAT returns. So you should be doing MTD returns for that. But for
If you're not,
so-
change your accountant.
Yeah, I was going to say that's a big one you don't want to get in trouble
Yeah.
for, isn't it? And so MTD, I know if anyone just heard that, is making tax digital, and just obviously it's way in the horizon now. It's back in 2026, which is brilliant news for all of us. But that is doing online submissions. Was that going to be every 3 months? Was it?
Quarter,
Right.
yeah.
Every quarter. So worth keeping up here. But that's good news. Is that just recently broken?
Yeah, it's what, a couple of weeks ago, Courtney, something like that.
Yeah, I think so.
Yeah, so just to sort of, if anyone's not aware of what MTD is, so currently if you're just doing a self-assessment, declaring everything at the end of the year, HMRC are asking for submissions to be done quarterly, where you update your income and expenses quarterly, and it's for the guys such as sole traders or property landlords that are receiving income from property, that we put all that on the tax return at the end of the year. So they want the quarterly submissions and then ultimately a final submission as well. So yeah, and it needs to be done through a compliance software. So those anyone that's keeping the receipts in a bag and then just adding them on your tax return at the end of the year, or keeping a record, in a book or anything, you need to move on to a software to do that. But the good news is it's not quite coming in yet. So it's 2026.
Which
Just really 21st centurizing everything now. Finally get rid of all the old-fashioned plastic bags now.
a nightmare for
that
you
though,
guys. Go on.
I know. On that, even though it's coming into 2026, personally, I don't think a bit of organisation is going to go amiss, and I don't think you're going to hate yourself in 2026 if you started to have a look at what you're doing at the moment and what you could tweak, just to basically be prepared. And then when it comes to 2026, it's like water off a duck's back. You're already doing it. There's no huge changes. And obviously in this sector, we find that organisation is key, and it's going to help you majorly down the line. So it's probably worth having a look at softwares. We use one called Free Agent, which depending on who your business bank is with, you can actually get a free account with. So it's definitely worth looking into, and I would highly recommend that you get it done sooner rather than later.
That is a solid top tip right there, given the fact that, you know what, it's only 3 years ago, only 3 years to go. That's not actually that long. And like you say, if you get yourself organized now, looking at some of the online softwares, I know personally, with the business that I've got with Gorilla, I found Free Agent really super straightforward, easy to use, integrates with pretty much everything, and is not one of those really annoying things where you're trying to get it to integrate with something and then there's a problem and you want it done there and then, and it's going to be a next week thing. It's just, it's super smooth. And I thought that would be a good question for us to ask actually, Courtney, and maybe for you to pick up on, because this was one of the questions that we'd got pre-submitted as well. around like getting yourself organized for the year as a locum, regardless of route, locum, sole trader, limited company, like as an accountant that does this every day, what are your top tips to make clients find this smoother? And you being my accountant as well, Courtney, what would make me the dream client? Like, how can we make life easier for ourselves and for you?
So on the topic of software, I would definitely say having that software in place and up to date. So maybe how Free Agent works, I don't know if any of you have a form of online software. It might work similarly to this. So you connect your bank and it pulls through all of your transactions from your business bank, and then all you have to do is explain them in there. A lot of software actually starts to guess it as well once you've explained it a few times. If you set yourself, say, every month, I'd probably do it on a monthly basis. I know quarterly is like what the timeline HMRC gives you, but I would say monthly. If you set yourself an hour or two every month to basically bring your software up to date and ensure that all your receipts that you have are uploaded onto this software, which in the case of Free Agent, you can just get a mobile phone app. Like, we find it very easy to open Instagram and post something on Instagram. It is literally just as easy as that. You go onto Free Agent, you find your transaction and you post a picture of your receipt onto there. So I definitely look to set yourself an hour or two of accounting time per month, and just to ensure that basically all your bookkeeping's up to date and all your receipts are attached and you know where they are.
That is a solid piece of advice. I know you've got more to add there, Richard, but I love that. Posting on Instagram, posting on your actual accounting software, same thing. Let's do it.
Yeah, it is.
And just on that, it's a great way of, making sure that you keeping all your expenses and not missing anything, because ultimately, the more expenses that you claim, the lower your tax bill is going to be. So, if you're out buying lunch or buying something that you require for your business, just take a photograph of the receipt while you're out and about, upload it to Free Agent, and that's done for when you're ready to get your tax calculated.
And it makes so much sense, doesn't it? At the end of the day, if you've got an end of year scramble where you're like, oh, these receipts are probably this will do, and you've missed a third of the things that you could claim, then doing it as you go just makes total sense.
Yeah, exactly. There's another one as well with mileage. So those that are traveling out and about, or maybe you might have one set place for work, but you need to travel to go and get equipment or for a meeting, anything like that. It's good to record your mileage there and then at the time. So whether that be a bookkeeping software, or even, I say to some of my clients, even if you keep on your notes on iPhone, I don't know if they have it on Androids, but in your notes, if you even just keep a log there of where you've travelled to, the amount of mileage, and then it's just as simple as that. If HMRC was to come and investigate into your taxes, and they'll say, oh, you've claimed 2,000 miles that year, what was this? And you just have your records, as easy as that. You can just send it on its way and there's no stress whatsoever then, because you've already done the work.
I love that. We love keeping the stress to a minimum where we can do, especially with this. And we've actually just had a couple of questions drop into the chat box, which are kind of around the record keeping, getting organised, MTD side of things. The first one is, does this mean that we should be changing from our own Excel spreadsheets to a bespoke program to be making tax digital compliant in the future?
Yes. It needs to be digital submissions. The good news is, like we said, you've got a bit more time to move over. I'm sure Courtney would agree. We'd advise getting some software, because it really does help you out. It will keep track of where you're up to and your tax liabilities, and obviously you can record your expenses and everything, but it gives you an overview of where you are with your tax in the year, how much profit you've got available. So there are a lot of other reasons that a good accounting software is worthwhile getting. But yeah, you would need to use one of the and that's any of the main software. So Xero, QuickBooks, Sage. We're really keen on using Free Agent. We love it, and we think it's really really user friendly. It's really easy to use. But any of those would be able to make the submissions, and they're already set up to do that. I think the issue has been all the delays with HMRC with NCD.
Amazing. We've had a couple of people talking about a few of the different ones. in the chat, and I've used a number of them over the years. I liked the fact that Free Agent very clearly tells me how much tax that I owe. It's right there in front of me, and I can be like, right, I need to keep this on one side. And do you guys have any top tips for locums, sole traders, limited company directors, in terms of keeping that tax on one side? Because I appreciate, and we've all talked about this before we jumped on this call as well, is you get to the point when we're paying our personal tax, we're paying our corporation tax. And is there like a rule of thumb or like a quick hack in terms of making sure you keep the right amount on one side?
Yeah, we do a lot of tax planning with our clients. So we'll get in touch during the year and say, you know, would you like us to calculate where you're up to? You know, some people say keep 20% aside for your tax bill, but it doesn't always work, because the way the tax brackets work, the rates change, and it's not a one size fits all. So, you know, you can either prepare a projection, you know, at the start of the year and know how much you pay yourself, or, you know, work it out as you're going along through the year. Use a tax software, or use your accountant if you do have an accountant. Definitely advise that. You know, they're there to give you guidance on that. I think the other one is, I know we're talking about self-assessments, and the deadline is in 2 weeks. This is for the previous tax year. So after the 6th of April, you can submit your tax return any point from then until the 1st of January the following year. So the sooner you get that done, you know where you stand, how much tax you've got to pay before the 1st of January next year. Obviously, you know, we're always busy at this time of year, so we're always keen for our clients to, you know, get us to submit the tax return earlier in the year. It helps us as well as them.
So that's how to be
It's all for us,
pet.
really. It's worth noting with that, the sooner that you file your tax return as well. So, for example, you find out you have a large £10,000 tax bill. It doesn't mean that you at that stage have to pay the £10,000. You then have until the 31st of January to pay as much of that off as and when you can, up to the 31st of January. So although you might not have a set direct debit up or a payment plan with HMRC, there's nothing stopping you, when you can see that amount on your personal tax account, there's nothing stopping you going on each month transferring £800, £900, or if you've had a good month or you've saved more, you can go on and do bit by bit. And obviously the earlier you do that, the longer you've got to pay off your tax bill as well.
And that's a good tip. So in terms of that, Courtney was saying the money is still due at the same time, but it's you kind of being more organized with saying, look, so for example, I could submit the next year that's due in January 2024. I could submit that in April this year. And then just start incrementally paying what would be due in January 2024. So I know, for example, like I submitted this year's tax return back in July time, I think it was. So I've known how much I'm going to owe in January. So I've been making sure it's on one side, but it's a really good top tip to actually say, look, you could pay it in increments. And then that means that you've not got that stress of, oh my goodness, like, where is this going to come from? Because you find out you owe that much tax 3 weeks before the deadline. So amazing top tip. And I know Ebony has just told me we have some anonymous questions to share in here as well, because we've got some real like gems of information from you guys so far adding in here. So Ebony, do you want to unmute and share a couple
I'm
of those?
happy to share those. So so helpful so far. I've been scribbling down for my own personal reasons because my tax is going to be very complicated going forward. So we've had some direct messages. So firstly, congratulations, we've got quite a few people who are setting up new startups and new veterinary enterprises. So well done for taking action and doing that and adding your piece of the puzzle into what you can do with your veterinary passport. And we've got one here that says, what happens if a family or husband lends a partnership, not a limited company, money? Are there any tax advantages for them? And what are the repayment options? And for instance, we've just built a home office. Are there ways of claiming tax back for sole trader or limited companies with regards to that?
So the partnership, you can loan money to the partnership, and we don't tend to work with partnerships too often, but my understanding is you can have interest on that loan as a tax deductible expense. So I'm pretty sure that's the case on that if you make a loan. I know that sometimes partners do need to get a loan to buy into a partnership, and that does apply in that circumstance. I know that, so that might be one thing to look at. And then the interest on that, the loan would go onto the tax return. With the home office, now this is a bit of a tricky one.
It's a favourite question we get in. It's a very popular one.
there's a bit of it's the division between yourself personally and your business. So if you own your home personally, for example, and your business paid for an office to be added on there, when you come to sell your home, you know, it can cause some issues because part of that is you know, it's not personally owned. So, you know, I usually say the best way to do it is pay for it personally, and if your business uses it, you can rent at a rate, say you would pay for an office to your business. That's the way I see it as being the best way of doing that. So that's an option, but it is a bit tricky because there's other things to think of. You know, so if you're doing it personally, you wouldn't be able to reclaim the VAT, which you would as a business. And there are other things. So if and again, this, like I said, it does get quite complicated. If the office is movable, so you know, if it can be moved from the property, then there is an argument for paying for that through the business, because you can say, look, it's not part of the personal property, it's generally business, and if we were to move, the office can come along with us. Yeah. Is there anything else, Courtney, on that one?
No, I was just going to say with the movable structure,
yeah,
the one to mention with if you used to rent it out to you personally, so you was to rent it out to your company, for example, just make sure that you keep it below the £1,000 self-employment trading allowance as well, so that obviously you personally wouldn't then be taxed on that. So we get one where I often get a question where, so they live in their house, they have this movable structure in the garden, and then they say, well, if I moved house, yes, I can move it, but what if I don't move it? And my example is, if you had a Tourer caravan on your drive, say you moved house, would you then keep your Tourer caravan on that drive for the next homeowners? No, you wouldn't. So it's the exact same way. You're not going to be able to justify an office in your back garden that you are there to happily to leave, because it shows that you don't require that for the need of your business. Because if you're moving elsewhere and you suddenly don't need it, then you never needed it for your business in the first place.
That is a good top tip and insight. And I think, again, all of, like, I know these are quite specific questions, are just testament to how valuable it is having a professional on board that knows the ins and outs and can kind of help guide you through, so you don't get tripped up, you don't miss things, don't end up missing out or paying too much tax or getting in trouble with HMRC, which I think puts the heebie-jeebies up all of us.
Yeah.
And we've had a couple of questions actually in the chat box now, and some thanks. We've had some lovely thank yous come in for that. What is the general cost of you having an accountant submit your tax return for you?
Well, we do a one-off service if somebody wants us to do just a tax return self-assessment. That starts at £200 plus VAT.
Yep.
It does vary, so it can be higher than that depending on, you know, the work involved. You know, so like Courtney said, if someone were to turn up with a bag full of receipts and say, there you go, it would be a little bit higher. But if you've got good records, we would charge £200, and I think that's a pretty good rate for the tax return. Most of the clients that we have pay a monthly fee, and that's not, it includes the tax return at the end of the year, any submissions throughout the year, but it's also the ongoing advice and the software that we provide. The accountant's always on the phone, so you know there is an argument for having the monthly service. But if anyone feels comfortable enough to just look after things themselves, wants an accountant to review the figures at the end of the year and make sure it's all been included correctly on the tax return, we're more than happy to do that as well. And sometimes people join up to the monthly service after we've done the tax return, and maybe give them a bit of advice at that point as well.
Perfect. Thank you so much. And I know very kindly you guys have said that anyone that mentions VetYou, as they do come to Gorilla, gets 2 months free accounting anyway. So make sure you guys check that out. And just to clarify, the £200 plus VAT, that's for a sole trader or for your self-assessment as a limited company director, but not a limited company, is just the 31st of January submission.
Yeah, that's right. It's just for the actual self-assessment. So if anyone's looking to still get that done, we are still doing them. It's getting a bit pushed for time now, but
with busted teeth, what we're doing there.
yeah. And it's not just the sole traders that need to do them. There are different. We have people with rental income, landlords that require them. The limited company owners that have shares in the company because they're receiving dividend income. So it's where you've got that untaxed income that needs putting on a self-assessment. We deal with all those.
Amazing. And we've got questions coming in left, right and centre here. So another one for you guys. The payment on account always confuses me, as it reduces what you owe, but I feel it doesn't make it clear. Is it more obvious if you look at your personal tax area in HMRC? And I've paid payment on account many times, and when it first happened, I was like, why have they taken so much more tax off me? I just don't get this. So if we can give like a basic lowdown on what it is, and maybe then how we can understand it a bit better.
Yeah, I think people actually see it as a devil, but I actually don't think it's as bad as it seems. I know there's more money coming out of your account, but all it is HMRC assumes that the following tax year, you're going to receive a similar level of income. So therefore, your tax liability is going to be similar to the last. So they expect you to do 2 payments on advance. But those 2 payments on advance, they're not just being paid to HMRC for the sake of it. They are then they then reduce your tax liability for the next tax year. So say, for example, so your 21-22 tax bill for January this year is £1,000. So then you have to pay 2 lots of £500 for your payments on account, one being in January and one being in July. Then we go to January next year and you file your tax return. If that's £1,500, you've already paid that £1,000 towards it. So all you have left then is £500 for that tax liability. And then same again, they split the tax liability, and then you have to pay it once in January and once in July. So it is just a payment in advance. And as long as you're aware of the fact that if your liability is over £1,000 and less than 80% of your income is not taxed at source, so for example, is self-employment income, then you are going to be liable to payments on account. So just basically be aware that you're going to be paying 2 lots.
Yeah. And is the sorry, Richard, you might be about to answer this.
It's a bit of a shock in the first year, because what happens is let's say you've been in a salaried role, you used to having the tax taken off on your pay slip every month, and then you move to being a sole trader, and you work a full year, you don't pay any tax on your income. That just sits and ready for you to do your tax return, and then it's only paid a bit later. So HMRC are going to say, yeah, well, you owe us this much tax, but now we're a new tax year after that, so we want the money for this year as well. So we're going to take these payments on account. So the first year you're paying the tax that's due for that year, and then you're paying for the next year as payments on account. Once you've got past the shock of the first year, those payments are actually going to reduce your next tax bill down. So like Courtney said, it's just the timing really, and so again, this is what your account should be making you aware of. This tax is going to be due. This is when it's going to be due. This is what it relates to, and this is how much it's going to be.
Yeah. And is that the best way to figure that out, to work with the accountant and find that out, or is there like any rule of thumb or anything like that for people to be aware, like roughly what they should be putting away for that?
So if you get the projection of what you're going to earn, which again your accountant can do, your tax software can help out with this as well. Excuse me. but the payments account is always equal to the same amount that you paid that way, but split into 2 payments.
Okay.
Like Courtney said, if you owe 1,500 quid, there'd be an extra payment of 750 in January and 1 in July. When you submit your next tax return, you'll have already paid 1,500 tax towards that.
Just one other thing on the payment by account, because I've got personal grief in this area. If you are predicting that your next year's income is not going to be as lucrative, and therefore you think you might not need to make that payment on account, you can make a request to HMRC to have that payment on account reduced or even zeroed. One word of warning though, and I'm sure the a guest this evening will vouch for this. You will get charged if you subsequently should have paid tax, and therefore you should have paid your payment on account. You will get charged interest on that money that you didn't make on payment on account. So you need to be able to predict, and this is, I think, a great way where your accountancy software comes into play. You do need to try and predict exactly what you're likely to make on a future year before you determine whether you want to try and avoid making your payment on account or not.
I'm really glad you pointed that out about the interest, because I think sometimes when clients come to us and say, oh, next tax year, I don't think I'm going to have as much, please can I reduce the payments on account? I think that they think we're being awkward by saying, well, yeah, you can. However, please be aware that if you do reduce it too low, then there's going to be interest payable. So they can, and sometimes they can actually reverse those payments on account and still expect the full payment from you. So it's actually not us being awkward, it's just us pre-warning you that just be careful with any estimations. And exactly like Matt said, that's where you can use your facilities of either an accountant or your accounting software, because you can get a more accurate idea of the tax liability that you expect for the following tax year.
So many top tips coming through and things to be aware of that, like you say, you might innocently say, well, that's not going to happen next year. You have a much better year and you end up paying that interest. And actually on the topic of interest, this is an interesting question we've had in the chat. And I think it's only really become relevant this year because the savings interest rates have actually become sizable, whereas the last few years savings interest rates have just been negligible. And they've said, would it be better to put the tax liability into a savings account rather than give it to HMRC in dribs and drabs from day one? I thought it'd be best to store your tax savings in an account that accrues interest and then give it them at the last possible date. I don't know if you guys have anything to add to that. I realise this year is different because we've actually got savings accounts that are worth putting cash in versus the last 20 years where we haven't.
I would totally agree with them, but it completely depends on the person. I think for me personally, although you could get the interest, I just know that if I was to pay it off, it's like a weight off my shoulder then, and I know I've done it. But however, the sensible decision, the sensible choice, if you know that you won't take out of the savings for one, and two, if you have a sizable account that gives you a good % of interest rate, then absolutely do that. Just look to submit your tax return still early in the tax year, but instead of paying it over to HMRC, pay it directly to that in that savings account that you can accrue the interest on.
One thing, so you don't actually get interest if you pay HMRC for your self-assessment bill. However, for your corporation tax, they do pay early payments interest. So there is an incentive to get that paid to HMRC, particularly, if your business account doesn't pay any interest for having the money set in there, which often is the case. So that's I don't know why the reason is, but that's the way it works with HMRC. You receive interest for early payment of corporation tax, but not the self-assessment.
Interesting. And I guess the other thing to bear in mind about savings accounts is as well that quite a few of them do have access terms too, don't they? In terms of some of them you have to give notice before you're allowed to get the cash out. So that maybe that's something to have on a radar if someone does decide to do that. You don't want to find that you can't get hold of your money and take it out of your account without fees and things when you're heading towards January 31st. So good question. Let's see what else we've got in here. We have we've got, if more than 80% of your income from PAYE, do you not have to pay the payment on account piece? I realise that's quite specific, but like, how is there anything to add around there?
That's right. So if the majority of your income is collected through PAYE, then you don't need to pay the payments on account. So like we said, it's 80%. If generally, so if you're a sole trader or receiving dividend income, and that's your main source of income, then the payments on account are required for any tax liability if it's over £1,000. But yeah, that's right on the 80%. Yeah.
Super. Another insight and top tip there. I'm just having a little look in the chat, see if we've got anything else. Please do keep popping your questions in there. I'm going to move to one of our pre-submitted questions where somebody said, can you clarify for me if I can claim my lunch as a locum? I've heard some people say they were told yes, and others were told that they had to be a certain distance from home. Is that one we can demystify here?
Yeah, there's definitely some rules on this. So it is slightly different, but pretty fundamentally the same if you're a sole trader or limited company. So we'll start with limited company. If you're working through a limited company, you're actually also an employee of the company as well. So one side of it, you're a shareholder, but you're also an employee. So if you go and work doing locum shifts somewhere, and it's not your sort of permanent place of work, you can claim for the lunch and also the travel. So that's mileage if you go in the car or if you get public transport, the actual costs. So just to compare that, that's like me or Courtney, employees of Gorilla. Gorilla go and ask us to go to VetYou headquarters to do a webinar. If we were to travel there and have a lunch while we're out away from our normal place of work, Gorilla would reimburse us for those costs. So it's exactly the same as a limited company. You can claim them as well as a sole trader, it's very similar. So if you're claiming, if it's working somewhere out of your normal routine, so if you go into a client visit or working a shift somewhere that's not your normal workplace, then yeah, you can claim for the lunch costs and the travel as well.
Perfect. Super. Thank you for answering that one for us. So yeah, as long as it's not your normal place of work and you've travelled there, which for most locums is going to be the case, because many of them that are operating as a locum, as that being their business in whatever setup that is, then they're going to be going somewhere that's not their usual place of work. But I also get it that there might be like complicating things there. So that explains it really well. The next question that we've had pre-submitted, if nobody else has any to add into the chat or wants to send them direct to Matt or Ebony or I. Paul's not here. Paul just fell out of my mouth then. How do you deal with that first tax return if you were employed for the first half of the year and you were sole trader for the other half?
Okay, so with that, you're assuming that your income is over the personal allowance, and assuming you've received over £1,000 in self-employment income, you're going to be eligible to do a tax return. So you simply record all of your income on that. With your employment, you have already paid tax on that amount. So all you do on your tax return is record the income you've received and the tax that's already paid, and that is taken into consideration. So what the tax return will actually work out is the tax rate that you fall into, i.e. are you a basic rate taxpayer? Are you a higher rate taxpayer? And therefore where your profits then fall into. So some of it might fall into the high rate, so then they'll be taxed at 40%. But the tax return will take into consideration any tax you have already paid, and just work out what's remaining.
But and I'd just like to add on that. This is one of the things I was saying before about there's no set rule for how much you need to put away, because it's all your income that's considered on the tax return. So if you've worked in employment, you paid all your tax on that, you don't need to worry about that. But if you're lucky enough to be a high rate taxpayer because you've earned over the threshold of 50,270, then your sole trader income is going to be taxed at 40%. Whereas if you've had less income through the year, the income tax on your sole trader income is going to be 20%. So with your tax return, it's all your personal income that needs to go on there, and the tax and the income that you've received from other sources will impact the tax you pay on the other income.
Good points to know. And I guess what would happen if you've got somebody that was, say, on a higher rate salary band, and they've been on that for some time, so they were in the higher tax rate. They've done 6 months in that job, but that 6 months for that year doesn't technically take them into that higher tax rate, if that makes sense. So say they've earned 35 grand in that 6 month gap, and then they go on to, I don't know, maybe they're taking a bit of a career break, or perhaps it's that they've just dialed down what they're doing, they've done their budgeting, and they've worked out that they can actually survive on a lower income, different life, work-life balance. And technically the remainder shouldn't be taxed at that higher rate, but they've always been taxed previously. Like, how does that all work? I realize that's a bit more complex, but what would happen in that situation?
So all the basically the first 6 months, HMRC, well, the payroll will be processed, assuming that you're going to receive that throughout the tax year. So that's same amount per tax year. However, per month for the tax year. However, at the point that you do a tax return, say you've done 6 months worth and you've done it based on a high rate amount. Basically, if you've overpaid the amount of tax, it just that tax return will show that you do a refund. And it's as simple as that. Any overpaid tax is just washed through a tax return, and you do get that. You do get it back from HMRC.
That's when you get the nice check arriving at your door, and it's a bonus at that point as well. And we've had another question that said, and again, I realize this might be slightly different answers, whether we're sole trader or whether we're a limited company, but how can I contribute to a pension in the most tax efficient way? They've got a limited company and they work PAYE as well. But if we do a general overview of ways that we can pay into a pension in tax efficient ways, I know this is a wide topic, but any insights or top tips?
It may be better to do it through the limited company, but again, it depends on your income and everything, and it's different from individual to individual. You do get tax relief on your salary if you do it for personal contributions, and yeah, if you get the chance to do sometimes it might be better to do salary sacrifice, and that all depends on your employer. But sometimes they'll increase, the employer will pay into your pension as a deduction in salary, so you have less salary, but they'll pay more into your pension. The benefit of that is because you're having less salary, you don't only get the tax relief on your income tax, you pay less national insurance. So generally, it's through a limited company, it's a bit better, but it depends on how your company offers, the tax relief. Because if you make a payment to your pension as your personal funds, that's from the salary where you paid tax and national insurance, income tax and national insurance. You get tax relief on income tax.
Yep.
Sorry, it sounds a bit complicated, but you will still have paid national insurance in your salary. So it's worth checking with your employer. Do they offer some sort of salary sacrifice scheme where you can maybe have a bit less salary and they'll make a pension contribution, because there you're going to save some NI on that as well.
Good insights and top tip. Go on, Courtney, go for it.
Sorry, if you are say if you're in the circumstance of you've just got a limited company, typically you will find, again, case by case basis. However, this is just like a bit like what the companies have done with IR35. This is a bit of a blanket answer. It's typically more beneficial if you've just got the limited company to actually do it as an employee contribution from your company, because like salary, a pension contribution from your company is actually an expense. So it will reduce your company's corporation tax by 19%, whilst meaning personally you don't lose anything out of your personal bank, and again, it's then tax efficient for your limited company as well. But please don't just assume that is the case. If you do just have a limited company, ensure that you do check all other avenues with your accountant to ensure that that is the most tax efficient route for yourself.
And again, I know we keep coming back to this, but it's just the benefit of having a financial professional on board that knows all these little ins and outs so that you don't end up losing out. And I know it's been so beneficial for me having conversations with you, Courtney, over the months of what's the best way, because I have multiple limited companies, like what's the best way for me to get cash out of here in a way that means that I'm doing it in the most efficient legal way possible. And that's where
Yeah.
you've been super helpful. And we've just had an anonymous question that's come through here saying, I locumed years ago, prior to the IR35 reforms, which we know there were a lot of changes within the vet space of how some of the bigger corporates were choosing to work with locums at that point. And I did everything through my limited company then. Now, since IR35 changing, is it better to locum through a limited company, or would it be best to do it as a sole trader? What are the considerations for either in the current veterinary markets? And I know a lot of that's still going to depend on which companies are choosing to work with who and who they'd want to work with. So I realize that's quite a broad question, but what are the things that they should maybe be bearing in mind? I know limited company versus sole trader is a whole topic in itself, but what would you input to that one and then making that decision?
Well, one of the things I think you've touched on there is who, your end customer, if they want to work with sole traders and all limited companies. I know obviously a few years ago there was a bit of a shift away from limited companies because the end sort of company didn't want the responsibility of doing the checks and everything that go with taking on the limited company locums. It has sort of improved quite a lot, and you guys will probably know the market for the vets locum sector a bit better, whether there's more appetite for working with locums now, but we've seen it pick up a lot more, shift back to limited company. But it's not a one size fits all answer, definitely not. Limited company generally are better, but it depends on how much income you've got. We always say there's more responsibilities of being a limited company. So you've got to file annual accounts on Companies House, make sure your filings are with do a corporation tax return as well as the self-assessment. We charge a higher fee as well for limited company because there's more work involved. Our fee is 95 plus VAT, and I think it starts at 50 for the sole trader option. So there's an additional cost if you want to use an accountant. I think with limited company, I'd say you do need an accountant, not just Gorilla, but it is something I think you would need. So there's those things to think about as well. With limited company, the other option you can have, and if any of you are married, you can have your spouse as a shareholder. So there can be a tax saving with that side of things. You're a lot more flexible in how you pay yourself, so you can work out the dividends. So you keep at the high rate threshold, so you're not paying high rate tax. You keep money in the business for if you wanted a period of time away from work and just a bit of time where you can still pay yourself dividends for then, or for whatever reason, if maybe you're unwell. So there are a lot of benefits for being a limited company, and it does generally work out better, but there's more responsibilities, more costs. If you're just doing a little bit of locum work, probably the sole trader options better. If you're just going to pick up the odd shift here and there, maybe do the odd weekend, then it's probably not worth the extra responsibility of having a limited company. But if you're going for a career change and moving to locum, or you're genuine business owner, then the limited companies, I'd say, definitely going to be the best option.
Yeah, and the prices that you just said there as well, ballparks, they were per month as well, just so people were clear too. So overall, essentially, go and check out who your end customer is, just like you said there, Richard. Do your research, find out who's actually taking limited companies, because if you realize in your area all the places where you're likely to locum aren't taking on limited companies, then that might feed into your decision. And also chatting through your individual circumstances with an accountant. I know I did that right at the beginning, and that really helped me just understand like what my options were, made some rough projections on how much that I thought I was going to be earning. That helped in the decision as well. And I think we touched on this, didn't we, as we were chatting before we brought everyone in. There's no like hard, fast, clear-cut rule as to this is the best route in these two circumstances and this is the best in these, because there's so many different like intricacies and individual circumstances. And again, that's why it's useful to do your research, but also go out there and speak to a professional that does this every day, that knows the questions to ask too, right?
Yeah, I'd just like to add, there's nothing to stop you from doing some locum work as a sole trader and some through a limited company, also having salary income, doing some work through PAYE or an umbrella company. So, you know, you can do both. So if you set up a limited company and then, you know, one of your clients ask you to work as an individual, you can still do that. It's not the end of the world. So don't think you've committed one way and you can't do it another way, because you can.
Good insights. And again, we've got in the chat, it's important to go out there and again find out like who's taking limited companies, who's not, because if all of your work is going to be through someone that won't take a limited company, then as wonderful as a limited company might be, it's going to be a no-brainer to go down sole trader. But I know there's so many, it's a changing landscape. We know that. We were just saying before, the last call that we did with Gorilla was about 2 days after we had the IR35 reform changes, and then there was a U-turn 10 days later. So actually sometimes just I was keeping up to date with what's going on the vet landscape as well. And my final question that I was going to ask both of you, just as we come to the end, because this has been brilliant and so insightful, is if you had, like, being accountants that work with tons of locum vets, if you had one top tip for 2023 for anyone that's on this call as a locum, what would it be?
Mine would be start from the first day of the tax year, get your new habits in, as in admin wise, and get that accounting software from the first day of the tax year and get it up and running. You don't necessarily have to pay for any, like I mentioned before, with certain bank accounts, you're eligible for a free account with free agent. So do your research. I mean, you've got 3 months until then as well. So I'm sure you can find a spare 10-20 minutes to have a look around at accountancy softwares, but definitely from the first day of the tax year, get that in place.
Superb top tip. And we know that one of the things we always love is Atomic Habits by James Clear, who says we don't rise to the level of our goals, we fall to the level of our systems. So like you said, a little bit of time every month, like you say, getting things on track from the beginning means that we don't end up with a last minute January rush of, I've got a bag of receipts, what am I going to do with this? And so I love that tip. And Richard, I'd love to hear what your top tip for anyone as a locum 2023 would be.
Yeah, I think, you know, Courtney's probably got the best one there, but yeah, definitely be organised. You know, speak to an accountant. You don't need to have an account. We'd be open to having a chat with anyone just for a bit of general advice, because there's some of the things we've not touched on today. You know, if you get past a threshold, with the amount of people where you get and they've passed the VAT threshold and they've not known it, so there's things that you know you possibly don't know about. So even if it's just for a chat, get some advice from an accountant, get yourself set up in the best way, whether it's limited or sole trader. Again, this is something we would all do, you know, part of the initial call. And, you know, if you decided not to use our services and you want to look after things yourself, that would be fine. But I think it's definitely worth getting a chat. And as we've said throughout, it's different for every person, the best way to go. So get some tailored tax advice for yourself. And like Courtney said, I think the most important thing is be on top of things and, you know, get your submissions in and you know where you stand.
I love that. Everyone is an individual, just like our own patients. There are many options, but it's about their circumstances. And just picking up on that little snippet there. So anyone that's listening that's like, clarify for us, Richard, what is the VAT threshold?
Say 5,000 is the VAT threshold.
And that's turnover. So if you start turning over, when you hit £85,000, regardless of whether you're a sole trader or a limited company, you have to become VAT registered. Yeah. So keeping an eye on that. And I guess if you are like hitting within 10 grand of that, it's worth really having that on your radar, isn't it? To start just picking up on that being a potential to cross that.
Yeah, exactly. And it's a rolling amount. So it's not per calendar year or tax year. It's any 12-month period. So if you have a higher income in one particular period, then you can fall into that, even though, you know, you're not always going to be over the threshold. So it's something that it needs looking at regularly, particularly if you're hovering around that amount.
Perfect, thank you. And you know what, I'm gonna, if it's okay with you guys, squeeze in one last question before we wrap up, because it's from one of our very regular VetYou supporters, Louise. Any info on getting a mortgage as a limited versus sole trader? I've been rejected via limited. Is there anything that we could do? I'm just seeing she's just added, we've added a bit more here. My wage didn't hit the mark for a mortgage, albeit this might be best for a mortgage advisor. Is there anything that you can say from an accountancy point of view, or would you recommend going and chatting to a mortgage advisor, of which we've got a few at VetYou, which we can always introduce you to if it helps?
Yeah, we'd say the same. So one thing we can give tax advice. We're not regulated to give advice on financial products such as mortgages. However, you know, we can refer you to someone who specialises, and I'm sure you have contacts as well, who specialise in, you know, mortgages for the self-employed. So, again, we could pass your details on if you wanted to them. I'm sure that you will be able to as well, Katie, because not all the sort of regular high street mortgages are set up for the self-employed, whether that's through limited or sole trader options. So yeah, get a good mortgage advisor and they should be able to help you.
I've also got something to add on to that. Although, yeah, speak to a mortgage advisor, with you getting a property through a limited company or attempting to, the circumstances of why you're purchasing that property and what you then expect to do, it also, that could change whether you should get it personally or via a limited company as well. So once you have spoken to a mortgage advisor, I probably would speak to an accountant just to make sure that you are purchasing that via the correct route.
Yeah, and
just on, I think was the query to do with a mortgage for their own house or an investment property?
So. Yeah, I think
yeah.
I assume so. I know we've not got that detail in the chat, but if we were going on it assuming that it was for personal, being a locum that works via a limited company, but I think it's great for us to consider all those routes, just thinking about the breadth of people that are going to watch this back, as well as everyone that's asked questions in the chat too. But again, we've got buy to let has just dropped into the chat. So again, great insights on like limited company, personal route. It sounds like the answer to this question is a mortgage advisor and an accountant coming together.
Yeah, definitely.
We can definitely advise on that. If it's a buy to let, we can deal with the best way to go via either limited or individually. And again, like a lot of our answers, it does depend on circumstances, because with rental income that you receive, if you're basic rate taxpayer, it's 20%. High rate taxpayer and above is 40%. With a limited company, you're paying corporation tax at 19%. So a lot of people are going for the limited company route now.
Interesting.
However, it does depend on your personal income as to how advantageous it is to use a limited company.
They are my favourite phone calls to have at work. So if you do want to call us and you want to call with me, just pop my name there and I'm happy to answer further questions, Louise.
Oh, amazing. As for Courtney, she is brilliant. I can vouch for that. And again, I know we've dropped plenty of details for getting in touch with Gorilla and the kind offers for members of the VetYou community as well in the chat box. I know Ebbs can pop those in again too, but it sounds like you got yourself a telephone date, Louise, so gonna have a chat on that one. And I think we've pretty much, because we very much value everyone's time on the call, especially our fantastic financial professionals here as well. I think we're pretty much coming to an end here, because we've got through a lot of those questions. We've got through the ones in the chat as well. Courtney and Richard and the rest of the fantastic team at Gorilla are fantastic, as we said. I can't just keep using the word fantastic. They're brilliant, fantastic, awesome, whatever superlatives we want to add in there. If you want introducing directly to any other financial professionals, we've got hello@vetyou.co.uk, or we can get in touch, like we said, with the Gorilla team as well. First of all, like we said, a massive thank you for your time, Courtney and Richard. It has been brilliant to have you here with us, your expertise, you've answered everything, been put on the spot with questions that you didn't know you were going to get, and as ever, given us superb answers.
Thanks for having us.
Thank you.
Thank you.
It's been superb, and thank you for answering so thoroughly. And I can see Ebony has just dropped. Gorilla is the #1 ranked accountancy firm on Trustpilot. They've also been awarded the FIFO Gold Trusted Service Award. I mean, you can't ask for better than that, can you? So well done, guys. I know you're a big part of that too. From VetYou, just a couple of wrapping up things as we come to the end of this Tuesday evening. We'd love to know what your key take home has been from this session. Drop it into the chat box for us. I'm going to get Matt and Ebony to do that too, because we were talking tax just before this started. So what have you learned in this session? We'll get that into the chat box. If we can help you with anything, if you want to speak to a financial advisor about financial products, things like income protection, life insurance, pensions, investments, we've got some fantastic financial advisors that have provided webinars and helped many of our community. If you want to be connected directly with Gorilla, drop us an email. Otherwise, Ebony's put Gorilla's website. And again, mention VetYou. When you join up, you'll get yourself 2 months of free accountancy, which is super kind of them too. Well, you can check out our full events menu. We've said to mention VetYou, and you'll get 2 months free accounting. And as well as a huge thank you, if anybody on this call knows any new or recent graduates, students that you would like to gift the knowledge of knowing more about finances to well ahead of time and all the things that we wish we were taught 10 years ago, we have an event just for them. So please do spread the word. We're doing a collaboration with the Association of Vet Students next week. We've got Ruth, the financial advisor. We've got the VetYou team. We're going to be covering topics that are relevant to recent graduates, new graduates, and students, all the things we wish we'd been told when we graduated 10 years ago now. So that will be going on as well. So I am diving into the chat to see what we have learned. Matt has put discipline, keep your business affairs separate. From the first day of the year, business mileage, credit card payments, etc. I am with you on that one, as much clarity as we can get. Do my tax return tomorrow on my day off. Yes, let's get that done. Yeah. And let's have a look. Thank you. I knew I needed to be prepared to put more aside to pay more tax in the first year, but didn't really understand it. So thank you. When we covered payments on account. Also, we'll be doing my self-assessment in April, nice and early. Yes, all about that.
Like that.
Good work. Well done. So
they're our favourite clients.
Want to get in the good books with the accountants. Get yourself sorted early. I've noted. So yeah, just again, honestly, Courtney, Richard, a huge thank you from us, and thank you to everyone that's been on the call this evening too, for spending time with us, investing it in yourself, asking the questions, interacting, coming along and learning. And to anybody that's watching the recording, everything that we were spoken about in here, everything that was signposted, the kind offer from Gorilla still stands. Sometimes we have to be aware that taxes change, information changes, so it's always worth checking in with a financial professional for the most up-to-date information if it's a few months after you watch this too. So thank you, everybody. It's been brilliant. And thanks for sharing your insights in the chat. Keep them coming.
And Katie, thank you so much for hosting us this evening. You've really brought it all alive, which is fantastic. My last thing I just wanted to say, another shout out for VetYou. If this evening you've managed to save a little bit extra on your tax, and one of the best ways of saving on your tax is probably paying into a personal pension, have a look at all the other ways and contact VetYou if we can help you save for your future as well. So that's the next logical extension once you've saved that tax, is to invest it for your future.
100%. And if you want to get in touch with us, hello@vetyou.co.uk. Ebony.
And remember that this is CPD. So you can log this in your One CPD app right now, reflecting on the one thing you're going to take away, because this is career CPD. It supports you being a veterinary professional, whether you are stay, go or diversify. So do remember to do that. We also have a YouTube channel that has a lot of our watch backs on. I would suggest you subscribe to that, because we often get lots of questions around these things. You can go back and review that. And again, it counts as CPD, free CPD.
Woo! Saving more money, free CPD. And we've done plenty of, we did some Friday finance sessions with Ruth, the financial advisor. They're 20 minutes long, 15 minutes long. You can listen to them while you tidy in the house, where we dive into like every financial product or topic that you can think of. We answer your questions. I ask everything you've probably wanted to know. So make sure you take advantage of those. Like Ebony said, they're all on our YouTube channel as well.
And if you think, oh, you're not covering the thing I really want you to cover, let us know. Everything that we do is built on requests from the community. So sign up to our newsletter, drop us an email, say, could you do something on this? And even if you think it's really weird and niche, honestly, I'm sure there are other people in the vet community that would really appreciate that knowledge. And we can also hook you up with other people potentially going through similar experiences too. So yeah, please do let us know, rewatch our sessions, but do request, what do you want to hear in 2023, or what evolution or development on previous stuff we've done do you want to hear?
Yeah, because we can make it happen. That's what we love doing for you all. So get your requests in, let's shape it around you to make 2023 the year of financially independent you, because that is what we are all about. So we have loved having you all here this evening. Thanks, everybody.
Thank you.